A massive de-risking event taking place, and we're going to break it all down for you because there's a lot of things that are happening that you'll need to stay very close in terms of attention to. Before we get into that, I do want to thank our sponsor today, and that is iTrust Capital, where you guys can get into some de-risking yourself and do that through a crypto IRA. Buy, sell crypto as well as gold and silver with your IRA. Very easy to take advantage of this, along with all sorts of things, low cost, no monthly fees. You can transfer in your own IRAs, and of course, very easy to set up. One of the things that is also happening right now, which I think a lot of people are aware of, there has been a huge amount of surge in phishing attempts. This is something that, of course, is a benefit when you are in an IRA. This, of course, gives you even more security. So check it out right there, itrustcapital.com. You guys are going to find it there. Use our link, get a $100 funding reward just to get started. Let's go over to a couple of points I want to hit on. And this, of course, leads us into one of the de-risk events that probably leads the entire portion of all de-risking events. And that is what President Trump is doing in Iran. He makes a statement right here for Iran. The clock is ticking, and they better get moving fast, or there won't be anything left of them. This time, the time is of essence. And of course, right now, he's putting more pressure on Iran. There's a lot happening around this. Most of it has been leaned in on that he just doesn't want them to have nuclear weapons. But the real situation, I think, is what they're going to do in terms of a proposal. They have come back with an updated proposal for a deal to end the war. The White House believes it's insufficient for a deal, and Trump is now expected to convene his top national security team on Tuesday to discuss military options. So this is the kind of thing we're dealing with right here, guys. This is not good. I think the key here is we've got to see this at least get into some sort of off-ramp. And every time we think there's one that is close, this is what happens. And of course, we see the markets respond to this. Kobe Isi kind of breaks it down. Iran has launched a Harmouz safe Bitcoin and backed insurance service for shipping companies that want to transit the strait. Number 4, it's very unclear if the insurance service will be charged in addition to tolls, which have been as much as $2 billion per ship. But all this is being paid, or potentially being paid, in Bitcoin. All right, one of the things that Iran has been doing is they've been dropping these AI Lego ads, and it's been all about, the confrontation. But this one is about Bitcoin, and it's dying in, and you can see it right, pay in Bitcoin. If anything, their marketing department in Iran is doing a good job with this. But the point is that we're going to continue to see a lot of pressure. I think the U.S. needs to be able to get out of this. Trump needs to figure out an off-ramp. Hopefully this is going to play into it, because right now the Strait of Harmouz is back in focus. Here's Mark Cudmore.
Now that the summit's out of the way, the Strait of Harmouz is back in focus. There's no real solution there. And we saw bonds kind of price that quite aggressively last week with the help of some high inflation prints globally. I think for stocks, in the last couple of weeks, we've been very bullish into the summit. And we said that post-summit, we expect the folks to return to the Strait and to be more negative, because there's no easy resolution to the Strait. So I think now we're in one of the larger dips that we're going to expect in stocks. I think that's going to last for the next couple of weeks. Ultimately, this doesn't derail the larger AI capex bubble. We'll still probably see record high in stocks later on this year, but I don't think this is a dip that people are going to want to buy quickly. They might try to buy quickly because we've got massive herding in stock markets at the moment, because everyone's getting their same advice from AI. But ultimately, I do think that stocks now have a couple of weeks in pain. And that, as we discussed last week, the headline numbers will be very dramatic, which will get people to declaring this is the end of the bubble. But that's only in context of the extraordinary gains we've seen in recent weeks.
All right, so to his point, extraordinary gains. If we do see a little bit of a retracement here, the real question is would you buy this dip right now? Let me know in the comments down below. Would you buy if we start to see some of these majors, especially if you look at MicroStrategy, you could even look at the dip in gold that we've had, some of the Mag 7, and of course all the AI plays I think is being considered right now. The good thing is that we are seeing at least some light in the tunnel around China. If you look at what the White House announced in terms of the U.S. trying to trade deals and some of the developments that came from this meeting, China's going to address some concerns regarding supply chain shortages on rare earth. These are the very critical minerals. They also approved initial purchase of some airplanes coming in from Boeing. You had China also buying $17 billion of U.S. agricultural products. That's a good thing, I think, for farmers. This is going to be paced out through 26, 7, and 8. And then you've got restoring market access for U.S. beef. That's another big one. China also has resumed imports for poultry from U.S. states. All of those are very good. And you've got President Xi who's going to visit the White House in the fall. So at least there is an olive branch between the two countries. This is an important, I think, relationship that Trump hopefully can manage and get this done. If he can just get out of Iran, maybe this starts to move the markets in a different way. But right now, we are seeing some rocky road ahead of us. Here's Tom Lee talking about risk for stocks. Take a look.
You know, if I look at the next 3 months, so not 3 years, I do think three tests are emerging for the stock market. You know, one is, of course, how is the Fed going to react to both the underlying inflation risks? The second is the market doesn't really like when inflation is a concern and yields are rising. And I do think we are seeing it now in PPI. I think there is in the pipeline a lot of inflation, not structural, but just inflation shock, but also energy shortage. And the third, of course, is, you know, I think we have a lot of IPO and that's a lot of supply. So I think we're going to face some tests later this summer. So I think the risk reward is still great for tech, but I'm not sure about the broader market.
Risk reward on tech, not broader market. Obviously, that includes risk. And I think the key here, because I agree, I think we are going to continue to see some more inflation shock. How long this lasts is the real question. The other thing that really puts a lot of pressure at the wrong time of year is energy prices. Because now you're going into the summer months. This affects everybody's vacation. It's going to be top of mind. This, of course, will affect what will happen most likely in the fall, especially around the midterms. But really the question is, how do you prepare? Because if this is a short-term window, then it might be one of those things where the, you know, sell in May, go away kind of the scenario may play into this. Listen to what Tom Lee said.
If I sit back and I say, well, how can I lean in now to parabolic moves that have already taken place? And at the same time, I don't like any of these other areas of the market because I agree with Tom, then what in the world do I do?
The move in DRAM, in my opinion, is actually somewhat defensive because we know that if you're worried about inflation and petroleum shortage, there's even bigger shortages in memory. So like people are buying what's going to work even if the macro environment gets tough. And I think that's why it makes sense for semis and DRAM to still do really well. And so I think that this pullback is going to be viable there. But to me, if someone's trying to make a bigger bet on tech, I think the really attractive risk reward is still Mag 7 and software. And Bill Ackman's buy of Microsoft really reinforces it. That's why software is actually still among our top.
I don't know. I'm not sure about software being a top one right there, but it could roll into one if we start to see a dip. All right, so when you look at the bearish side of Bitmine, this is BMNR, out of their 13F filings, there was some recognizable names that cut very sharply in Q1. One, of course, JP Morgan. Then you have Fidelity. Then you got Goldman Sachs, Royal Bank of Canada. All these were down significantly. And JP Morgan's position is now just 223,000 shares, considerably down where they have been. So back to Tom Lee's point, looks like we may have a little bit of a period of time here in the summer where we see some of the corrections. Now, all of this could also jump very quickly, as we all know, with what's happening in the Strait. You also have some benefits, I think, that will start to play into this around the Fed. But right now, it looks as though the Fed is going to have a hard time doing anything other than pausing or, dare I say, a rate hike in 2026. The Wall Street Journal article, and this kind of rolls into it, the economy Kevin Warsh is inheriting is not the one he wanted. The next Fed chair now wants to lower rates, but if you look at the data, it's absolutely impossible for him to do that. And I actually don't like this. I don't know if there is a way around this, and I have listened to Warsh kind of talk about his strategy, but again, you're still dealing with a ton of issues that are facing this Fed, and I just don't know if we're going to see it. If lucky, if we will get a pause on the next one, and after that, because of course correlating this to what's happening in the summer months is going to be very, very tough. World's biggest investors are now selling all at the same time. As you can see, Warren Buffett's successor Greg Abel trimmed the Berkshire portfolio, another 40 positions down to 26. Fully exiting Amazon. This one surprised me right here. United Health, not so much. Domino's, I expected. and then cutting Chevron and Bank of America. Bill Ackman sold 94% of his Google Class C, 95% of his Class A. What does this tell you guys? Or what do they know? What do they know? Are we going to see something that is major in the TradFi market? Because remember, this has been almost up only for about the last 6 months. So very interesting moves from some of the best investors out there on Wall Street. Justin Goldman also disclosed $700 million in Bitcoin ETF holdings in Q1. Firm cuts ETH exposure by 70%. This is a big deal, also hitting XRP and Solana, at least from Goldman. But when you look at the performance, right now, XRP has been the only one that has been performing over the last few weeks and continuing to show positive where we have seen declines in ETH, Solana, Bitcoin. This is net inflow right now that we're starting to see. Notice you're going to see positive net inflows here with XRP. Correlation to price still sliding up, but not necessarily in the sense of what we've been watching with XRP over the short period of time. The real question is what can it do for the charts? Let me know in the comments down below. How do you guys see this played out? I was talking to Stephen McClure earlier today. He thinks end of year, XRP could be double that of where it is right now. And that might align with what Tom Lee is talking about going on. If you look at where safe havens are going, well, that's USDT. The dominance now shows that the U.S. market is scared and rotating into stablecoins. Are you guys putting your money or some of your digital assets now into Tether? Are you going into USDC? Let me know. Are you going to RLUSD? Put your stablecoin down in the comments. I want to know which one you're using if you are exiting some positions. Berkshire Hathaway sitting on all-time high in cash, $397 billion. Can you imagine? Almost $400 billion in cash. You could buy 478 companies, maybe a couple of countries on the S&P 500. So kind of nuts right there in terms of how much they are putting in. The other thing I don't like, and this is the question mark, and that is AI. Historic collapse in sentiment. Axios published these numbers. Now, granted, it's Axios. I don't know where they get this data from, how these polls are put together, but here's some examples. 70% of Americans say AI moving too fast. Do you think that? Is it yes or no? Only 18% of Gen Z feel hopeful about it. And then you have record number of data centers were canceled in Q1. I have been hearing and seeing that. So that does concern me, but most of the time it's been supply chain issues, deals with municipalities where they can get licensings to get these things built. I don't know that they're pulling off. It's just there's roadblocks that are being put of them. Right now, the risks are now being flagged as the highest levels. This could also be a scenario where this pullback actually does happen, and these may end up being good buys later this summer. So I'm still very positive about where this is heading. Especially in these higher tech products out there. I'm still very amazed that people are exiting Amazon right now. I think Amazon's still one of the bigger plays. Meta, though, is cutting 8,000 jobs this week as AI spending surges. This will continue to put some more pressure on the Fed if we continue to see job losses, along with rising inflation and, of course, rising energy costs. This is definitely not a good cocktail moving in to the summer for Kevin Warsh right now. Last point I want to hit on right here, if you look at Ethereum, Tom Lee is in a little bit of a conundrum here. If anyone's wondering why ETH has been under selling pressure, well, you kind of look at it right there. We've seen this before. However, you know, we have seen these kind of ebbs and flows with Ethereum, and then you see these market adjustments that just come roaring back. Now, it doesn't get to an all-time high maybe this year, or does it? You know, that's the real question. If we see a below 2K, and Evan and I were talking last week, could see a 1,700 ETH. If we see a $67,000 Bitcoin, where would you guys make an entry on Bitcoin or Ethereum? Give me your price down below. We're going to cover this and a lot more because Clarity is hitting this week. We'll probably get some more news on that, and most likely more pressure on the macro. So stay tuned. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.